If you listen to Dave Ramsey on life insurance, you know he teaches to buy term life insurance. As a former endorsed local provider for Dave's organization, I recommend Dave's sound principles designed to save you money, get you out of debt, and increase your retirement savings. But a second question needs to be answered. Which kind of term life insurance? The old kind of term life or the new kind? Life insurance you don't have to die to use. We call them living benefits. Simply put, the old kind of life insurance pays only if you die. But what if you don't die? What if that heart attack, stroke, or cancer does not kill you? Will your life insurance pay your mortgage payments or replace your lost income from missing work? Studies show that suffering only one critical illness is enough to cripple your ability to retire. Families have to tap into their retirement to stay afloat financially. Your ability to retire one day or stay retired is threatened because you had to pull money out of your retirement accounts prematurely. How often does that happen? Well, every 40 seconds, someone in the United States has a stroke. Every 26 seconds, someone suffers a heart attack, and nearly half are under age 65. Americans have a 1 in 2 risk of developing cancer at some point in their life. You probably heard the saying, most families are one paycheck away from bankruptcy. How would you maintain your family's finances if you suffered a heart attack or stroke or cancer and cannot work for weeks or maybe even months? 63% of personal bankruptcies are due to an inability to pay for medical expenses. More than half of all bankruptcies in the last 5 years were medically related. And 70% of those bankruptcies actually had health insurance and other workplace benefits. So let me ask you again, will your life insurance pay your mortgage payments or replace your lost income from missing work? Probably not. And I can say that because most of the term policies out there are the old kind of term life insurance. Let me be clear, living benefits life insurance is not simply a terminal illness rider. Almost all policies have a rider that accelerates your death benefits when you're dying. Living benefits provides for so much more. It's life insurance you don't have to die to use. Let me illustrate that a little further. A policy with living benefits can provide much needed cash if you have a temporary setback due to a critical illness, such as a heart attack, stroke, or cancer, or even a long-term care situation. This is cash paid directly to you out of the death benefit of the policy, in addition to what your health insurance, disability, or Social Security pays you. A terminal, critical, or chronic illness can lead to increased expenses and decreased income due to lost wages. Once your expenses exceed your income, you begin to create debt. And you know how Dave Ramsey feels about debt. Even when you are sick, bills still have to be paid, especially non-medical expenses such as mortgage and auto payments, food, even insurance premiums. Life insurance with living benefits can provide the cash you need to get your family through a crisis and protect your retirement savings. When you visit our website, you'll see testimonies of families who were rescued from financial ruin because their life insurance had living benefits. And the good news is that often this new kind of life insurance costs no more than the old kind that pays only if you die. So, do you have the wrong kind of life insurance? One thing is for sure, you'll want to find out before it's too late to change. When Dave Ramsey chooses an endorsed local provider, he makes sure that person will represent his organization with a high level of integrity. If you would like an honest, no-cost, and no-obligation assessment of your current life insurance policy, give us a call or stop by our website and fill out the information for an easy quote. You can call us toll-free at 1-800-985-62 888-888-6341 or click this link to go to benefitsforliving.com.